And joining me now with some more movers on Wall Street, we've gotten in some news from Deckers, and that's seeing a sell-off. Diane King Hall here with me now to talk about the details. Diane.
Obviously, the applause is not for Deckers today. Those shares under heavy pressure, adding to the difficult year it's been for this stock. It was already down about 50% before today's move. You add today's move, down another roughly 14% off the back of its results. And it's not about its trailing quarter because it did beat expectations. I'll quickly run you through those numbers. EPS came in at $1.82. That was better than expected. Revenue $1.43 billion, also better than expected on the top and bottom line. But here's the concern, in part, the guidance, right? The company is guiding for 2026 sales of $5.35 billion. That's weaker than expected. And the CEO noting a more cautious consumer. And Nicole, I know you were just talking with Sam about kind of the state of the consumer and tariff risks that are both, it's doing a combination of things. It's forcing it to have to do some price hikes, and it's pressing on demand. So UGG's direct-to-consumer sales, for instance, those slid about 10%. Hoka did gain market share, so that is good. But the issue from the view of analysts is if you're seeing weakness in UGG demand, that means you may actually have to cut prices instead of raising prices. And then, so that just continues to create some difficulties for the company in terms of moving stock. In other words, by stock I mean inventory, because they do a lot of their sales direct to consumers. Again, the company blaming the softer outlook on tariff risk, driving up costs. They say they are doing selective price hikes. We've heard that familiar language from different companies. They are expecting about $150 million in unmitigated expenses from tariffs. That is better than their earlier estimate, but it's still a headwind for the stock. Hoka, again, gaining market share, but not helping, and it's a red flag in terms of analyst views, Nicole.
All right, and then we take a look here at Newmont Mining. The sales were on the rise, but the stock's lower.
Yeah, so, some of this, look, the stock had already been up more than 100% so far this year. It's had a massive run. They did actually have a big earnings beat, but they did warn on cash flow. And part of this also has to do with some of the correlation to gold. This is a gold mining company, right? So we've seen this pullback in gold. So they already lost some ground earlier this week, tied to that pullback that we've seen there. So adjusted EPS came in at $1.71. That was better than expected. Revenue was up 20% to $5.5 billion. That top forecast. Profit, in fact, doubled because of these record high gold prices. Driving the results, the gold price has been a tailwind. Investors, as we know, have piled into the metal amid worries about tariffs, geopolitical tensions as well. They are maintaining costs. They've been under control. One flag, I guess investors are reading it as a red flag today, but it may be potentially more of a yellow flag. Management is warning that Q4 free cash flow will dip. They're citing both construction spending for its water treatment facilities in Peru, and then some severance payments that accrued in Q3.
All right, and last but not least, Procter and Gamble. Now, this is a big one. What do you think here?
It's a hometown company for me, Ohio company. They did better than expected. Initially, I was looking at shares on the rise. They are still on the rise, up 2.25% right now, which helps this company because it's been an underperformer year to date. Clean beat, beauty and grooming leads the way here. Strong numbers that we saw in beauty. Revenue came in at $22.39 billion. That was also better than expected. We saw an increase in organic sales. Beauty sales up 6%. Good part of that had to do with Olay and SK2. SK2, strong brand there. Grooming sales up 5%. So you saw growth in both Gillette and Venus, maybe because everybody's back in the office. They're doing more grooming. I guess you have to groom all the time. Fabric and care, home care, you did see a decline there. So there is some pressure on Tide and Swiffer. And you also saw a decline in healthcare. In terms of the consumer behavior, the CFO talked about this. The CFO saying, quote, the consumer environment is not great, but stable. They are seeing that K-shaped economy that we've talked about, and we hear from different both economists and market watchers that we talk to. The higher income shopper is holding up. They're buying bigger pack sizes. They're actually trading up, but the lower income consumer is stretching every bottle down to the last drop, Nicole.
Yeah, you talked about all the different types of brands. I saw new Tide Evo detergent driving significant growth in the category. The CFO that you talked about really even talked about product innovation, helping the company. So up 2.25% today. Diane, thank you. Great look there at Deckers, Newmont Mining, and Procter and Gamble.